Shares of Duolingo are down 16% as I'm recording on Friday after the company reported earnings. Now, the drawdown for the stock is about 82% from its high. The question is, was this a terrible report? Is this something to panic about? The answer really depends on what your time frame is as an investor. If you're looking at what is Duolingo going to do over the next 3 months or maybe 6 months, yeah, things don't look like they're heading in a great direction. The company's still growing, still generating positive free cash flow. This is not a company that's in dire straits by any means. Also still has a really good balance sheet, but it's maybe not going to grow as much as a lot of investors thought in 2026. But if you're a long-term investor like I am, you're looking out, what does this company look like in 2030, in 2035? I think the future potential just got even bigger. That asymmetric potential is even higher today than it was yesterday. I'm going to explain exactly what I mean by that. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you want more from me, check out Asymmetric Investing. My newsletter is a link on the screen, a link in the show notes. You can follow my asymmetric portfolio. I buy stocks once a month. That will be coming out Monday morning for all premium subscribers. And I'm covering stocks like Duolingo. Got a very small position, a starter position in Duolingo. Likely be adding to that in 2026. I'll give you the reason why. I also want to thank this video sponsor, Fiscal AI. I'm going to be using Fiscal AI throughout this video so you can see exactly what the platform looks like. But this is the best tool for fundamental research. With a stock like Duolingo, I get to look at their earnings report and listen to their conference call all on one platform. Just a phenomenal way to use the tool, and you get phenomenal charts. So if you're an investor who wants to share ideas with other people, this is the best place to create those charts. Now, let's dig into the results at Duolingo. This is the high-level results, and they start with this with the highlights for the year. Daily active users up 30% from a year ago. This actually increased sequentially. I'm going to get to their monthly active user number. That doesn't look quite as good. But what they're really focusing on right now is increasing this daily active user number. The target that they put out is they want to be able to get this number to 100 million people by 2028. So that's kind of the bar that they've set for themselves over the next couple of years, focusing more on that daily active user growth in 2026, adding modalities, probably increasing engagement, not necessarily monetizing quite as much. That's what that's what investors are reacting to on the market. They want to see that financial improvement and they want to see daily active user growth. Management is saying, hey, we got to put the daily active user growth first, and then we'll be able to monetize long-term. Revenue for the quarter was up 35%, total bookings up 24%, and net income and adjusted EBITDA, really strong margins. These margins are going to come down a little bit. I'll get to that with their guidance. There's also really strong cash provided by operating activities, $107 million in the quarter and $388 for the full year. Now, when you get a little bit further into this letter, you get to what investors are reacting to. While our daily active user growth over the past several years has been phenomenal, it has been decelerating. And in 2026, they expect daily active user growth to be about 20%. And what they're saying is they think that's because they've been focusing on monetization in recent years. So what are they going to be doing? There's going to be more video calls. So if you were a subscriber to Duolingo Max, you got video calls with Lily. They're going to be moving that to some of their lower tiers, so a little bit lower price tier. The idea here is you're going to maybe move some of those free customers up to a paid tier, but you may lose out a little bit on that premium tier. So there's two different price points for those premium tiers. Management is going to do a lot of A/B testing around that. That's one of the things Duolingo is really known for. They don't just make decisions and then put it out into the world. They do a lot of A/B testing on how this is going to work. But Luis von Ahn talked a lot about this on the conference call that, hey, this is the plan, this is the direction we want to go to, but we are going to follow the data. So again, the transparency that they're giving to investors, I think, is really positive. If you haven't listened to this conference call, this is one that I would listen to if you're an investor, because the clarity with which he talks about the business and the long-term vision and getting to that 100 million daily active user number, sacrificing short-term profitability for a long-term opportunity, finding ways to teach the world better. These are all things that increase that potential pie in the future. More AI-powered speaking. So here's another thing where you're going to be able to use artificial intelligence tools, maybe increase those inference costs. It's going to hurt margins just a little bit, but you're going to be able to make a bigger impact on people. So here again, does the learning experience, does the engagement go up when you go from clicking on buttons on a screen to actually talking to Duolingo? Whether you're talking about you learning a language, whether you're using that with chess or math or music, all of these things are things that we're going to learn about over the next couple of years, but they increase uncertainty for Duolingo's financial performance. They also want to improve word of mouth. This is the best way to grow a business, is word of mouth, but it's also the slowest way to grow a business. So again, sacrificing short-term financial results for long-term profitability and stickiness of the business. Now, they talked about their next generation growth engines. They did not say what sort of modalities they're moving into in the future. Chess, math, and music are three things that they've talked about. But to get to this 100 million daily active user number, they're going to have probably more modalities that they're teaching. And the short-term impact is going to be felt in the finances. Bookings growth of around 11% compared to 20%. That's what they think they could have achieved if they would have operated similarly to previous years. And adjusted EBITDA, I mentioned that margin is going to decrease to about 25%. So while the fourth quarter numbers were not really the concern for investors, what was a concern was the guidance for 2026. Start here with the Q1 guidance on the left, bookings growth of just 11% in the first quarter. For the full year, that's the same midpoint, 11% growth. On the booking side, revenue up 25%. And for the full year, expecting a little bit of headwinds in the back half of the year as those comps get a little bit more difficult, so 15 to 18% growth. Now, management is typically pretty conservative with their guidance, so wouldn't be surprised if we see this actual revenue growth number be over 20%. But again, you're bringing uncertainty, you're sort of lowering those expectations. That's what the market's reacting to right now. And this adjusted EBITDA margin, at least for 2026, they're expecting this headwinds so that this margin is going to be pretty low. Now, I also want to highlight the one thing that I am generally critical of with Duolingo: stock-based compensation expected to be almost 15% of revenue. So when you look at Duolingo's profitability, their net income, the difference between net income and free cash flow is going to be really wide because net income includes costs that are associated with stock-based compensation. Free cash flow does not. So this is a company that has a lot of cash coming into the business, but also a lot of dilution from that stock-based compensation. All right, so now that we've gone over the numbers, let's go to Fiscal AI and just look at these long-term trends and try to put them into a little bit of perspective. And I'll end it with the valuation discussion because I think that's where things get really interesting for Duolingo. This is their total revenue growth. And remember, revenue growth expected to be a little under 20% in 2026. So what investors don't like to see is revenue growth decelerating, going from 50% to 40%, 40% to 30%. Now we're going all the way down under 20%. If Duolingo just had steady revenue growth of, let's say, 23%, that's how you get a 10x stock long term. That's how companies like Amazon, Apple, they didn't grow 50, 100% year over year. They were just steadily growing in excess of 20%. That's potentially what Duolingo could still do as they're focusing on increasing this daily active user number. You can also see the free cash flow is really solid, $370 million over the past 12 months. To put that into a little bit of perspective, there's about $1 billion, a little over $1 billion worth of cash on the balance sheet. The enterprise value is just $4 billion today. So the enterprise value to free cash flow, at least on a forward basis, is only about 12 right now. So you're starting to get to the point where investors are pricing this company as if there's major disruption coming. That's not, I think, what we see from management and from the numbers right now. So let's get to some of the user numbers because this is, again, one that's causing a little bit of concern for investors. The monthly active users has essentially been flat throughout 2025. This is, I think, if there's one red flag that you're going to look at from this earnings report, it's going to be that stock-based compensation. It's also going to be this monthly active user number. How many people are actually downloading the app, using it every once in a while, but not necessarily on a daily basis? That hasn't really gone much of anywhere. Okay, but let's hide that and look at the impressive growth now in green that you get from daily active users. These are going to ultimately be the people that pay for your platforms, the people that are using it on a daily basis. You want to see this number going up. Like I said, management put out the goal of 100 million people being daily active users. That's something that could potentially happen if they continue at this growth rate. So this is going to be a number that you're going to want to watch going forward. Of course, revenue, free cash flow, that's going to be really important. But are they actually getting that engagement on a daily basis that they're looking for? The other thing is paid subscribers. And this is where management has said that they've maybe pushed a little bit too hard, is leaning into these paid subscribers because that has increased pretty steadily over the past few years. Now, do we see a pullback in this? Does the absolute number continue to grow as the number of paid subscribers? So you do get 15, 20, 25% growth, but the daily active user number, the number of people who are using it on a free level, actually increases even faster than that. That will be interesting to see over the next couple of years. Now, you can't talk about any of this without looking at the balance sheet as well, because this is what's going to be kind of the backstop for Duolingo stock. It's what's going to give management the ability to take this long-term view because they have $1.1 billion worth of cash. And like I said before, they have cash coming in from operations of the business. So one of the things that I'm looking at with some of these stocks that are declining right now, and maybe the core business, there's questions from investors, but I'm maybe more bullish long-term, 5 to 10 years out, than those investors that are looking short-term is what is management doing with in the meantime? Do they have the ability to do something like buy back stock or pay down debt? And are they willing to do that? So that was why I like seeing that a $400 million share repurchase program was also announced when this quarterly report was announced. So they have the cash to be able to do that. They have a lot of unearned revenue, so basically prepaid revenue that customers have already paid for sitting on the balance sheet. So you don't want to bring this down to zero, but you do have cash coming into the business. You do have a really solid balance sheet. You might as well use this opportunity to be buying back your stock. And doing that at under $100 a share is going to be much more attractive than where it was trading even just a few months ago. So the theme here for Duolingo is, are you looking at this as a short-term investment or a long-term investment? Because if you're looking at it as a company that could be worth $1,000 a share 10 years from now, that's that 10x potential that I'm looking for in companies. I think the current trajectory of Duolingo, the change that management has made over the past 6 months actually makes that more likely. Increasing that daily active user number, increasing engagement. I think that they need to add more modalities, add more of those interactive AI tools. And this is a company that can actually do that better than a lot of their potential competitors that are just smaller in much smaller niches of the market. There's a lot of work to be done, but I think the potential is there for Duolingo. And a lot of the numbers, like daily active users, are pointing in the right direction. So not one that I'm panicking over. Like I said, it's a small position in the asymmetric portfolio today, but likely one that I'll add to in 2026 if we start to see momentum moving in the direction of attracting more users and more engagement on the platform. But let me know what you think about Duolingo stock. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.